Hey everyone, if you're new to investing, you're going to want to keep watching this video because I'm going to run through the 3 different types of investment property and the pros and cons of each one. There are 3 different types of investment property I'm going to run through today: long-term residential, short-term Airbnb and commercial properties. So if we look at long-term residential and short-term Airbnb investments first, as these are both done from normal residential properties, the deposit you need is going to be the same, whether you're going to rent it long-term or whether you're going to use it as an Airbnb investment. Generally, in New Zealand right now, the deposit for long-term residential lets that you need is about 30%, whereas with commercial property, you're going to need a deposit much higher, 40%. Long-term residential lets tend to be quite easy to rent out. You've got more predictable income because the tenants hopefully will pay you the rent every single week. As opposed to Airbnb, obviously you might have a high season and a low season. Summer might be a high season if you're near the beach. Winter might be the low season. So you need to be good at managing your money. If you've got an Airbnb, save some for the winter time. You still need to pay the mortgage. Long-term residential, if you have a property manager to manage it for you, it's going to be lower time input compared to an Airbnb. A long-term residential let, if you're a beginner, you probably want to get a property manager, just because there are lots of rules and regulations, and you don't want to be stuck with a bad tenant. Airbnb, you can either do that yourself or you can get a property manager to do that as well. I run an Airbnb here in New Zealand, got a little batch close to the beach. I do that myself, but I get a cleaner in to do the cleaning part of it, and it certainly is a higher time input compared to residential or commercial property. Residential property rent is more consistent than Airbnb rent, so you do need to be better managing your money if you decide to do an Airbnb rental instead, because you're going to have high seasons and a low season. Also, each year is different. So actually, during COVID, we've got an Airbnb, and during COVID, we actually had quite good income. The lockdowns lifted just as we needed them to. Lockdown lifted just before high season, and we had a lot of local travel because people weren't traveling overseas. But now we're in a recession, we're finding that the income is a lot lower. You can reap higher rewards with Airbnb as the revenue you get does tend to be higher. Again, it does depend what area you are. But you do generally have higher revenue for Airbnb. You just need to manage your cash flow a bit better than you would with a long-term residential let. You've also got higher expenses with an Airbnb because you'll probably pay a cleaner unless you're doing it yourself. You've got the commission that Airbnb charges, or the other apps like Book a Batch, VRBO. There are tax differences between the different types of investment property. So here in New Zealand, there's a thing called interest deductibility. When the Labour Party came in, they took away interest deductibility or started phasing it out for residential investors, whereas commercial properties, you've always been able to deduct the interest that you pay to the bank as an expense. The National Party are in now, and they're phasing it back in. So residential investors, including Airbnb investors, they can start to deduct their interest again as an expense. It just means that we'll pay less tax. There is something called Bright Line as well, which means that if you sell the residential property, it doesn't apply to commercial. If you sell the residential property within so many years, you'll pay essentially a capital gains tax on the gain that you've made between buying and selling the property. With Airbnb rentals, you're going to have to think about GST. So at the minute, the GST threshold is $60,000. So if you go over $60,000 in income, so if you earn $60,000 income, not profit, from your Airbnb, you'll fall into the GST threshold. Again, the impact of that differs slightly depending on what entity you run the Airbnb through and what entity you own the property through. Again, it's quite a complex area, so you want to talk to an accountant about the best way to structure the ownership and to run the Airbnb if that's what you're going to do. But you just need to be aware that if you go over $60,000 of income, you are likely to fall into the GST threshold, which can have an impact on the GST status of the property, which can be a con if you go on to sell the property and you have to charge GST on the sale of it. It can put potential buyers off, and you can actually end up, because residential properties go up in value, you can end up paying more GST over to the IRD than you actually, you got back in GST. But complex area, so I won't go into that anymore. Commercial properties, you're going to need a higher deposit when you buy it. So generally it's about 40%. The loan term is shorter than a residential property, so you're going to pay off the loan in 15 years as opposed to 30. So your loan repayments are higher. You're going to pay a higher interest rate. Typically in New Zealand, the tenants cover the outgoings. So for example, they cover the insurance and the rates and any other expenses in addition to the rent they pay. So you'll get a commercial valuer to value the property, to value how much it is worth rental wise, and he will value it at the net amount. So he'll value it at an amount, and then the tenants pay outgoings on top of that. That is the typical common scenario. Just be warned, and I have come across this myself, is that if you're buying a commercial property from an inexperienced seller, investor, inexperienced real estate agents, you just want to be careful what that lease agreement says between the tenants. If you're buying a commercial property with tenants in place, get a lawyer to go over the lease agreements and just be very clear on the rent that the tenants are paying, and that whether that rent is inclusive of the outgoings, being the rates and the insurance and other things, or inclusive of those outgoings. It's going to make a difference to the amount of return you're going to get. Commercial properties are riskier than residential properties because they cost more to buy, they're higher interest rate, you've got higher repayments. If your tenant decides to leave the property, or if they go bump, if they go insolvent and they can't pay the rent, then you as the owner are obviously responsible for the mortgage payments for the outgoings to the bank. So you're going to need to cover that, and it's going to be a lot more than it would be if it was just a residential property. So you're going to have some savings as backup, as just an emergency fund, really. So just to summarise, if you're a beginner investor, I'd probably, if I were you, this is just my opinion, I'd look at a residential let first, either a long-term one or short-term Airbnb. If you want to look at an Airbnb, I'd probably look at one that's close to you. Then if the people that rent the property have an issue, you can go down and sort it out. You don't have to rely on other people to do that. Long-term residential let, get an agent to help. In terms of the potential to add value to any of these properties, with residential properties, whether they be long-term or short-term, you can obviously look at ones that maybe need some renovation work doing to them. Price that up. Do your numbers to make sure it all adds up, but you can certainly add value if you look at something that needs some renovation doing to it. Or you can look at ones that might have some extra land, maybe you could subdivide, add another property. You can do that with both a long-term let or an Airbnb. Maybe you could put a little sleep out at the back of the residential property that's there, rent both out on Airbnb, increase your revenue. With a commercial property, same sort of things apply. So you can renovate a commercial property, generally it's going to cost you more money because it's going to be a bigger property. You can look at one that's got more land, so you can subdivide, build another commercial property on the side of it. If you buy a commercial property that is under rented, so the current tenants aren't paying the market rent, you can obviously at the next rent review look to increase that to market value if and only if the lease is on a market value basis. If the lease is based on CPI rent increases, then you're only going to be able to increase the rent by a certain percentage each year, which means that you've got limited ability to increase the rent and increase the value of that property. That's all for today, folks. I hope you enjoyed the video and that you've got some value out of it. Happy property investing.